Welcome to Carter's Corner Pocket, where we feel the rocket. Today, I'm talking GameStop. All right, what are we doing? MSCI index. Let me hit the screen. I'm angry. No, I'm not angry. I'm just chilling over here. Let's see. MSCI World Index. Look at this. All-time highs. All-time highs right now. Literally hit all-time highs. What is the MSCI World Index? It's the market index. It tracks the performance of, large mid-cap stocks across 23 developed countries. So it's basically the cumulative, I think it represents like 85% of the world's market cap is in the MSCI index. So yeah, all-time highs, saying stocks are at all-time highs, companies are at all-time highs. Let's go take a look and see why that is not the case. Over here, private sector hiring rose by just 37,000 in May, the lowest more than 2 years. Private payrolls increased only 37,000, right? 60,000 was the number reported in April. That was the increase. Over here, May, 37,000, large decrease. The Dow Jones forecasted it to be 110,000, so we're really coming in low. Private sector job creation slowed to a near standstill in May, hitting its lowest level in more than 2 years as signs emerged of a weakening labor market. Payrolls processing firm ADP reported Wednesday. Now we're waiting for the non-farm payrolls on Friday, coming up on Friday, so tomorrow. So we'll see that. I don't even know what day it is, man. I'm so busy. While the two reports often differ, occasionally by large margins, the ADP count provides another snapshot of the jobs picture at the time when questions are being raised over broader economic conditions. And then chief economist for ADP said after a strong start to the year, hiring is losing momentum. Okay? Companies, listen to this. Now this is a big part. This is a big part of, this is probably the biggest part because this is small businesses. This applies to small businesses rather than mid and larger sized firms. Companies employing fewer than 50 workers saw a loss of 13,000. 13,000. 50 or fewer workers saw a loss of 13,000, while those with 500 or more employees reported a drop of only 3,000. Mid-sized firms actually gained. So who was hit the hardest? Small businesses with less than 50 workers. That's like the slaves that they push out there to go hold the economy up, you know, like the bottom, you know. But yeah, they lost 13,000, man, that's crazy. That's crazy, while large firms are gaining. Okay, and then we also have this, layoffs, right? Trump administration loses bid, I don't know, let me see, my bad. I should have been a little bit more prepared, but I wanted to throw something out there today, just to say hey to the world, what's up? But yeah, there's layoffs coming around. Baytech area layoffs. Google, Microsoft, Cruise all announced job cuts. Disney makes hundreds more layoffs as it cuts costs. It's consistent. Let's go to page 2 and you'll see more. Warner Bros. Discovery makes layoffs across Cable TV Group. Thousands of Microsoft layoffs. What could they mean? IRS, PwC layoffs. I mean, what more do you need, right? I mean, the market's at all-time highs, right? That's what they're telling you. That's what they're telling you. The dollar just had its weakest start to the year on record. Why it might be doomed to fall even further? It definitely will. I'm telling you. Yesterday I told you Morgan Stanley said it'll go from 98, where it was at yesterday. I didn't look at the Dixie Index today, but they said it'll drop to 91. And at the same time, the yen, the euro, and the Swiss franc will rise. So if you want to make money off it, make money. It's not financial advice. But yeah, here you go. Investors around the world are rethinking how to approach their exposure to the greenback. I mean, the U.S. dollar just not being the major reserve currency of the world, the outlook is that. It looks like that. It's crazy to me. But the thing is, if the U.S. dollar goes down, if the economy goes down, even though they're telling you it won't, the rest of the world goes down. But now you can see investors are pulling their money out of the U.S. so they don't have that issue. Why are they pulling the money out of the U.S.? Because the U.S. is going down, regardless of what people tell you. U.S. stocks have largely recovered their losses from April's tariff-induced market meltdown. The dollar hasn't been so lucky, though. I don't need to read this. There's a paywall, but you get the gist of it. You get the gist of where we're going. Global investors have a new reason to pull back from U.S. debt. I got like 3 minutes. Let's run through this. Global investors have a new reason to pull back from U.S. debt. After hedging currency risk, foreign investors no longer make money buying American bonds. My whole life growing up, U.S. has been the currency. U.S. is where the money goes. Everyone wants to get into the U.S. This is the first time, like, I truly feel like people are withdrawing their money from the U.S. at this large mass scale. But we're the ones left living here, living in this world. What else is there? Let me take a look. I'll read this one. We're the ones left over here, right? Well, all the foreign money is leaving. We're left over here with high prices, all these tariff issues causing price hikes, and U.S. ISM services. Here, ISM. This is going to talk about the cost to produce a product, and then I think the sale price of the product or what consumers pay. But let me read it real quick. I read it earlier. ISM services PMI for May came in below the market expectation. U.S. dollar stays under selling pressures in the American session on Wednesday. It says the business activity in the U.S. service sector contracted slightly in May, with the ISM, Institute for Supply Management Service Purchasing Managers Index. I'm sorry, I hate reading all this stuff. Look, the PMI index, Purchasing Managers Index, is the price what they pay to produce the product, right, or purchase the product for resale. It's dropped from 49.9 to 49.9 to 51.6 in April. Okay, so what is that telling you? It costs less for them to produce a product, to purchase a product either for resale or produce a product. The production of the product costs less. This reading came in below the market expectations of 52. So the market was expecting the price to go up, but it was actually down. Okay, great, grand. So that means the consumer, should pay less. No. Respondents continued to report difficulty in forecasting. Did I even miss that? Did I miss it? I missed it somewhere. Here you go. Other details of the report showed that the prices paid index, what I would pay, what you would pay, the inflation component rose to 68.7 from 65.1, while the employment index improved from 50.7 to 49. So employment index improved. More people got jobs. Okay. The cost to produce the product lowered. But why am I paying more? Why am I still paying more? Because they're trying to steal every dollar from our pockets, no matter what. They're trying to brace for what's coming. Businesses are trying to brace for what's coming by overcharging us now, while products are being are cheaper to produce. All of this going down, right? Tariffs and everything, and the housing market is like, we got townhomes over here for 700,000, 800,000. If you go a little closer to DC, you'd easily see $1 million townhomes. 1.5 in DC, you're looking at $2 million townhomes. You know, like it's crazy over here. I can't do that. But let's see. Demand in the housing market just got even worse. Applications for mortgages to purchase a home fell again in the lease. I'm all messed up. Applications for mortgages to purchase a home fell again in the latest reporting week, having collapsed by 39% from the same week in 2019, according to data by the Mortgage Bankers Association today. Mortgage applications are an early indicator of demand in the housing market, preceding pending sales and closed sales. The 39% plunge in purchase mortgage applications compared to 2019 documents the extent to which the demand in the housing market has vanished after prices spiked in just 2 years through mid-2022 by 50% and more, substantially more in many markets. Demand destruction sets in when prices are too high, a fundamental economic principle. We got a lot of things going on, right? I already showed you MSCI index. I did all of that. Okay, cool. 8:31. I got to bounce. Kids got to go to work. These I'll do later, but GME, GameStop, it's what I'm invested in, solely invested in. I hold one company. If you see, there's a video out there. I have it. I can't play it today. Warren Buffett says, diversification of stocks are for idiots, people that don't know what they're doing. You only need 1, 2, 3 good companies for your lifetime. I found my company for my lifetime. It's GameStop. It's headed by smart tactical management, operate like they're at war. Don't tell anybody their plan, but they're operating. You can see it on their balance sheet. I was bullish on GameStop when they had $1 billion in cash. Now they have $6 billion in cash. Well, 5.5 billion cash, 500 million approximately in Bitcoin. Maybe we'll clear that up during earnings. Q1 earnings, we're going to see how it's going to be. Are we going to wreck it? What's going to happen? I have to look deeper into that. But until then, till next time, can't stop, won't stop, GameStop. Let me just see. I see bearish divergence forming on the SPY. On the daily? Was it the daily? It could be forming. It looks like it. It looks a little bit like it. It depends on if this curls up or it goes down. Now, okay, we have these two tops, double top. You can see the direction here. And down at the bottom, going down here, the orange line. That is bearish divergence on the daily of the MACD. That is even more strong. So we're going to see if it bumps here and goes down, then the market will go down with it. Same thing happened over here as well, and over here as well. So yeah, that's where we're at today. Quick market update. Thank you for watching. Can't stop, won't stop, GameStop. Peace.